Hey everyone, welcome back to our news trading session for our theory and practice. And again, we do apologize for the lateness due to technical issues. But yeah, we're live and we'll go through this very quickly. It's not like there's actually a lot to kind of cover. We were kind of expecting the government shutdown in the US to kind of end pretty much yesterday. Didn't quite happen, and here we are, still stuck with another government shutdown here. I'll be honest with you guys. I don't, I kind of doubt that CPI number is actually going to be released next week either. I might see some breakthrough, but thinking about how things are developing right now over there, not quite sure if we're going to see the government open in the next week either. All right, so let's go through some of the theories first tonight, and I think it's a quiet time to go through some of the stuff here. But yeah, again, we'll cover some of the pending orders that we typically use during our news trading session. So let's get this started with a quick disclaimer here. Leverage trading involves risks, and you should trade responsibly. Again, regional restrictions do apply, and terms and conditions does apply as well. This is for educational purposes only. It is not a financial advice, and past performance is not indicative of future results. Okay, I'll show you the code for the 100% deposit bonus that you can use with Octa when you deposit into the trading account there. And if you already have access to the private Telegram channel, if you have attended previous sessions, or if you registered for this webinar through the Octa's website. If not, do please get in touch with the customer service team. All right. So this is a code that's not from 2025, and feel free to use the code. It's still valid until the 31st of December 2025. All right. Just a little bit about myself. My name is Jaro. I've been a full-time trader with over 20 years of experience, and I've been a professional trading coach as well as technical analyst since 2007. My expertise is in the Ichimoku Kinko Hyo technique, and I've also been invited as the guest speaker at Trading Investing Expo across Australia, investor in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association. So yeah, we'll go through this very quickly. Let's talk about the advantages of news trading because we were kind of late and we kind of need to rush through a lot of the stuff here. All right, advantages. We're talking about high volatility equals high reward here. So if we take a look at the major news releases, they do cause strong price movements. It does create multiple trading opportunities for you guys as well. But let me just kind of flip this scenario a little bit. When we talk about high volatility, it's not just high reward, it's also high risk. So yeah, you have to balance it out. But generally, if we talk about the advantages there, yeah, it moves very quickly. So a lot of traders, the problem with a lot of traders is that we have our trades, we got our setups, and we kind of just waited a long time before it hits our projected target and whatnot. But with news trading, it does create that high volatility, and we'll see very strong price movements in a very short period of time, therefore making it very time efficient, because these trades are very often short-lived and with setups forming and resolving quickly after the news. And that's basically what we do with our news trading session. We set up our trades 5 minutes before the release, and we'll try to get out as soon as we can. Typically, we don't really want to overstay beyond that 15 minutes window after the news is released, okay? Another advantage is clear timing, so you know exactly when the release happens, right? We can take a look at the economic calendar. So it's all done. I mean, if we take a look at the economic calendars here, we do know, sort of the status or when these news are actually going to be released, right? So, for example, today, we can kind of filter out. I just want to look at the high impact news. And I'll be looking at this news this week, for example, and if we apply the filter there, obviously you got your retail sales numbers for the Eurozone. That was on Monday. Today it's Friday. Again, we are kind of anticipating the Michigan Consumer Sentiment Index. Is this going to be a market moving event? I would think this is going to be a market moving event because we are all kind of flying blind at this point in time. And considering that the CPI is probably not going to be released on time next week on the 15th as well. So it's always good to know when this event happen, right? All right. And then we also have our directional conviction, because when news aligns with the market consensus, it does reduce indecision in trend direction as well. So what I'm trying to say is when we get the news, typically it pushes in one direction. That would be kind of the general direction where it's going to head, except for the NFP where it kind of whips out a little bit, but eventually it does goes into the initial direction that the market takes it to. The other advantage here is that it works with both technical and fundamental strategies. So you can easily combine this with, smart money concept. If you're into that, you can take a look at the supply and demands or trendline setups, Fibonacci, stochastics, RSI. You can do that. And for longer term traders, obviously the fundamental kind of click in as well, right? So yeah, it does work for both technical and fundamental as well. Now, news trading here, if you're reading this and you say, okay, is news trading fundamental? No, it's not. Okay, news trading is a completely different thing. It's not considered part of fundamental analysis. Okay, all right. Let's take a look at the disadvantages here. We have unpredictable spikes, right? And that would kind of be the counterpart of that high volatility side, where it can be a high reward situation, but because of the unpredictable spikes, it does cause a few problems as well. It might trigger a slippage, it might trigger a spread that widens a lot, and that would basically mean either your orders are not going to get filled when you want it during this release, depending on liquidity, and at the same time, the cost of placing that trade during news. Typically, you have to bear with that high spread, and that means higher costs when you open the positions, right? The wider the spread, that means when you open a position, the higher the cost is, because your initial position would be with that higher spread, it'll be negative whatever that spread is going to be. The other disadvantage is that it does require precision. Therefore, I would say this is actually not suitable for super new traders, right? Unless you know what you're doing. Because if you enter a few seconds too early or too late, you're either going to get a poor feel or you're going to get an invalid signals. If you rush into it, you're likely going to get an invalid signals because you don't know how market is going to process the data. And if you come in too late, then market might have already been running in one direction there. You might be very far away from your initial entry level. So that would be some of the risks involved here, okay? And then we got your whipsaw risk. Typically, if we have conflicting data, then we'll get this whipsaw risk. Now, if we take a look at the NFP numbers, typically you'll see a lot of this whipsaws, and that's because the labor data is not just the non-farm payroll number. We also need to compare it with the unemployment rate. And if we do get conflicting views, for example, if the unemployment rate is low and the NFP number is also low, that's going to be a very conflicting view, because NFP needs to be positive for it to be good, and the unemployment rate needs to be low for it to be considered good. If we get a conflicting news, then we could see that whipsaw risk where traders initially take a certain position, and then they look at the data, they compare it, and they say, oh no, this is actually wrong, or a wrong reading, and then they might actually reverse the position. So that's where your whipsaw risk comes in. Now, the other thing is sometimes big news gets shrugged off by the market entirely. This is all about the context of what's needed by the market. So sometimes even high impact news might not pose a significant impact into the market. So we might actually see no reaction into that. And this year, I think we have seen a scenario like this happen about 2 or 3 times when we take a look at the CPI numbers in 2025. And lastly, I would say it's actually not beginner friendly. I think I mentioned this earlier, but news trading requires experience to handle the speed and volatility with discipline. What I'm trying to say here is that you need to have the experience to understand how previous movement in previous releases moves the market. And if you don't have that experience, it's going to be very confusing. Sometimes you say, oh, this is supposed to be good. But if you read it in the wrong context, then it might have the opposite reaction. Or if we say, you probably heard of this, buy the rumor, sells the fact, that kind of thing does happen as well. So I wouldn't say this is actually beginner friendly. You do need some experience as well. That's number one. Number two, you need to have very high discipline. If you detected that something is actually wrong and you need to kind of reverse the position immediately, you have to do that. And a lot of beginner traders just doesn't have that capability to pull that trigger because either they don't understand what they're doing, or they're just not fast enough and disciplined enough to make a split-second decision, okay? So those are your advantages and disadvantages when it comes to news trading. Now let's talk about type of market moving events. We are looking at a lot of hot, unexpected news lately. These are going to be unplanned events that often cause sharp market reactions. For example, terrorist attack, military conflicts, which is ongoing right now. A couple of good news, right? Phase one for the, I would say, I wouldn't call it a peace deal or anything like that. At this point in time, it's really more of a ceasefire and kind of first step agreement on their negotiation between Hamas and Israel at this point in time for Gaza. I think people were already celebrating yesterday, and Israel has confirmed it, Hamas has confirmed it, that they're going to pull back troops a little bit. But if you look at the statement that Trump posted out, it is only a first step. It's not a complete withdrawal of Israeli troops out of Gaza at this point in time. They're just pulling back a certain distance. That's number one. Number two, Hamas still has to release their hostages as promised. And again, I wouldn't say this is actually very concrete at this point in time. And considering that Trump didn't actually get his Nobel Peace, I don't know what could happen over the weekend. So we'll see what happens here. But yeah, military conflicts does cause this market moving events as well. And then we got natural disasters, and we also have political elections, like what happened with the Japanese election there. We have seen the Japanese market, the Japanese yen reacted strongly this week. But then we have another problem. There might be a possibility that Takaichi is probably not going to be elected prime minister because they just lost the coalition in the government. The LDP right now is a minority government. And yeah, things like this, it does have an impact into the market, okay? Typically with unexpected news, if it does carry a lot of negativity in the market, then we take a look at safe haven currency strengthening. We look at safe haven assets strengthening. This is basically what we saw with the movement in gold, which kind of just breached 4,000. And I actually posted out a little bit of a report into what it is. So if you are trading with Octa, so if you're trading through Octa Trader, I'll show you a little bit later on in terms of where you can actually find these updates that I kind of push out, several times a week. All right. Then the other type of market moving events is obviously the scheduled periodic news. These are your regularly published economic indicators and central bank communications. We got central bank meetings, we got interest rate decisions, we got the FOMC meeting minutes last night, these are market moving events. And what's interesting with the FOMC meeting minutes yesterday and some of the comments coming up from Fed members, voting members, is that they are cautious at this point in time. They see weakness in the labor market, and they are right now thinking that any impact from tariff is going to be a short-lived inflation. that might not last very long. But because they're not quite sure with what data they're dealing with, and especially with some of the biggest revisions in the labor market that we have seen in this year, they do put out a very strong note here that they're not going to be cutting more than 25 basis points, for the next few cuts. Okay, so I think that kind of rule out that 50 basis points cut that a lot of people were kind of anticipating, especially with the government shutdown. So we'll see what the market reaction is going to be today. All right, inflation indicators, the CPI, which is supposed to be released next week, but with the government shutdown here, we're not going to get anything. Quarterly GDP reports, we already got that last month. Unemployment rate, again, we don't have it. Data is available, it's complete, it's done. We're just waiting for the government to reopen, and then it'll probably get published. So far, no leaks has been seen. Manufacturing numbers, ISM, PMIs, right? Those are your scheduled releases. Now, these are releases that you can actually anticipate. These are releases that you have your consensus. These are releases that a lot of traders trade with, okay? To be honest with you, because of the nature of those hot news or the unexpected news, there's no way we can know when it's actually going to happen. And I think a lot of the conflicts that we have seen kind of happen over the weekend. So we do have that, surprise every Monday there. All right. Now let's take a look at some of the most profitable news events to trade. We got the CPI number. And why is it profitable? Because it drives central bank decisions. And typical market reaction is that we are going to look at a very strong dollar reactions. And it does have an impact onto gold and the Forex market as well. And then we have the NFP numbers, or the unemployment rate, which is part of the US jobs reports. It does trigger volatility across dollar pairs. US 30 does get impacted as well. Gold and FX market, typically anything with the US dollar, is going to have spikes. It's going to have a huge movement. It's going to have a huge volatility. The crosses, not so much, okay? FOMC rate decision. This is your direct interest rate movement. This is going to impact the bond market. And obviously, when we talk about the bond markets here, any increases or decreases in yields, that's going to impact the base currency. If we take a look at the FOMC, obviously this is about the US market. It will have a huge dollar volatility. It will also have an impact on the equity market as well, and bond market significantly as well. All right. GDP reports, it does reflect overall economic health, unless it's actually extreme or it kind of miss the year-on-year growth. Typically, we don't actually see a significant impact unless it's a data that surprises the market, like what we saw about 2 weeks ago. That's where we have our currency valuation adjustments, okay? And then we got the purchasing manager index, typically with the ISMs, right? Those are your forward-looking views of growth conditions. Is the economy contracting? Is the economy expanding, right? So these are going to be your early mover for FX and indices. This one here, I don't think it would actually benefit short-term traders. In all honesty, I think it does have, it's used in a much more longer term view of a certain assets, okay? Okay, so do keep in mind, these scheduled events tend to offer consistent volatility and opportunity, but as a pro tip, you need to combine scheduled news anticipation with technical confluence for higher probability setups, okay? All right. I'm going to go through very quickly with the three main phases of price movement. This are not your sideways market condition, uptrend, downtrend, and whatnot. But typically, what we're looking at here is that the movement before the news, during the news, and after the news, okay? So before the news, what the ideal condition here, or the ideal phase here, is that we want to see that accumulation phase. This is where the most informed and forward-thinking insiders enter here. These are people that understand what's going on from a fundamental perspective. These are people that have data or are able to calculate the data that kind of matches whether or not a consensus is going to be true, right? Therefore, I would say this is actually very limited to professional traders, right? Or high net worth traders, or maybe even an institution that has that capability, that inside information, that is able to hire a lot of analysts to do a lot of consensus, do a lot of maths behind the scenes there, to kind of prepare themselves before the data is actually released. Now, and then we have the participation phase. This is during news release. This is where the technically driven traders enter, understanding what they're looking after the news it's actually released. The distribution phase comes in a lot later. Now, I actually have a very good example of that in the current market. But distribution phase, basically, it's where everyone else that are clueless, everyone else that are not invested into the market, I would say this is your general moms and pops, I would say. They get their information from maybe they're private bankers and say, hey, it's time to buy this, people are buying this, look at the market, it's already gone so much and stuff like that. They're actually coming in late to the party here. Now, this is the reason why we call it distribution phase. This is where everyone else jumps on board and they kind of lift the assets very, very quickly, okay? So when you do that, people that were accumulating the positions, they use that opportunity to get out. So let me give you an example here. This phases, if we take a look at how it works, typically it works in more of an equity market condition. Like this is basically where the observation comes from. So people accumulate positions there because they have huge positions. They're not able to buy a lot of stocks at the same time. They're not able to open up a lot of lot sizes in a short period of time in one go, because if they do that, they would actually disrupt the market flow. Okay, so they'll try to layer it, they'll try to hide it so that people that don't understand, the retail traders that don't understand, are not able to kind of figure out what they're doing. Okay, so accumulation phase happened. Participation phase is where a lot of retail traders comes in. These are more experienced retail traders, right? And they'll jump in on phase number 2. When phase 3 happens, people that jumped in on phase 1, they'll say, hey, they'll start offering their assets, right? They say, hey, are you looking at NVIDIA stocks? You want to buy NVIDIA stocks? Okay, feel free to come in because I'll sell it to you, because I already made some of the profits here. I'll sell it to you. So that's why we call it distribution phase. So people that want to get out and take their profits, those are being absorbed by people that comes into the party late, okay? That's the reason why we call them distribution, because the faster it goes up, the steeper it goes up, the higher the risk that it would actually collapse, okay? Now, a very good example for whatever this is right now, it is actually gold. We understand that gold prices has been moving up really quickly. It just hits 4,000, and I kept giving a warning. It says, if it hits 4,000, be careful. It would actually snap back. It might actually correct itself. If you're thinking of opening a position, look for a lower price, maybe a lower price that is actually below 4,000. And if you take a look at gold prices right now, it has come down. Okay, that's what we see in the market. But leading up before the fall overnight, a lot of retail investors or people that don't know what is going on actually went up and queued to buy gold bullions. Well, this is actually true for Australia. So I look at those people and I would say, you know what, this is actually really sad because you're buying at a very expensive price, and you might get stuck because that is a distribution phase. People might actually get out when they hold a position from 2,500, 3,000. They're taking the profits out at 4,000. And then we have a lot of people that are less informed. They thought, hey, gold is going up really quickly. You know, let's go for that gold rush. And they start buying it at 4,000. And I think that's a very sad scenario. So you need to understand which phases the market is doing before opening a position during news trading, okay? Because if you get in during this distribution phase, and I can assure you, I'll say 80%, 90% of new traders comes in during distribution because they heard from their friends that, hey, you know, I made a lot of money on gold, I made a lot of money on the crypto market. And by the time they hear that, those people that make money, they already get out from the market. They're not in there anymore, okay? So you have to understand the phases here. So there's a couple of general rules for news trading. Before the news, you need to study the market context and understand the dynamics of the currency pair or assets that you plan to trade. You also need to review past reactions similar to news releases to identify behavioral patterns. You also need to mark key support and resistance levels on your chart to anticipate breakout reversal zones. And you also need to define your strategy, whether you're trading the news on the spike or you're actually fading the reaction. Now, you would also have to really form your execution plan properly, right? Because you need to set your trading time frame. Are you a scalper? If you're a scalper, then you want to set it up in the 5 minutes or 1 minute chart. If you're an intraday trader, you want to be looking at a 50 minutes, 30 minutes to an hour chart. If you're a swing trader, you want to look at 1 hour, 4 hour daily and beyond, okay? You also need to control your risk. You need to determine the maximum acceptable loss per trade, and then you want to apply a proper position sizing as well. You also need to use stop loss and trading stops for protection in high volatility conditions. You also need to decide whether the trade will be short term. Are you going to stay in the market for 1 to 15 minutes, which is what we typically do? Or are you going to be holding it post news longer than an hour, maybe even a day or two? Okay, so you have to make sure you got all this planned out before you even open a position. Do not open a position and then ask people what you should be doing when the news is released or after the news is released, because you shouldn't do that. Okay, before you open a position, you would need to understand how much you're risking. How much is your potential target? Is it realistic? All right, don't jump in without having this plan out, because you might get lucky, but most of the time it'll just destroy your trading accounts. Okay, so just keep that in mind. All right. Okay, since we're speeding things up, let's go through very quickly about the pending orders that we have here. Now we want to talk about 4 pending orders, which is the buy stop and the sell stop, and then the sell limit and the buy limit. The chart itself tells you what it is. The buy stops are basically order placed above the current market price and you expect price to continue to rise up. You want to use a buy stop. The sell stops are order placed below the current market price, and if you expect price to continue to fall down, then that would be your sell stop. Okay. The sell limit and the buy limit are a little bit different. A sell limit is that it is an order placed above the current market price, typically around resistance. And if you have a view that the resistance could fail, that's when you want to use the sell limit. Now, for example, with gold, a lot of traders are saying, hey, buy on the dips, buy on the dips, buy on the dips, right? So buy on the dips, typically you want to use a buy limit, okay? So you anticipate market to drop down, hit a support level, and then bounces back up. This is buying on the dip. So if people talk about buying on the dip, then you want to use the buy limit, okay? So let's break this down. When to use the buy stop? If you expect price to break above resistance and continue rising, then you use a buy stop. The sell stop is if you expect price to break below support and continue falling, then you use a sell stop. A sell limit, if you expect price to retrace upward into resistance and then reverse, you use a sell limit. A buy limit is when you expect price to pull back into support and then bounces upward, buying on the dip, all right? So very simple as that, okay? So to simplify things even more, when we look at stops, it basically means, okay, if if a breakout continuation is going to happen, I want to use a stop order. If I expect a reversal or a bounce, then I will want to use the limit orders. Okay, very simple. All right. So why do we talk about the phases here? Because typically with news trading, especially with what we call the straddle strategy, which is using the two stop orders here, we want to have a corridor volatility. So we want to see the market in that accumulation phase. If it does that, then it gives us the opportunity because it'll create a range, it'll create a resistance, it'll create a support, and any break above or below this support and resistance will trigger a move in that direction. So because we don't know what the reaction is to the market most of the time, we can predict it, but not with high probability guarantee that, oh yeah, this is going to happen. We still use this kind of straddle where we actually want to trap the market that is actually moving in the sideways market condition, so that if it breaks in one direction, we will be entered into that trade. And we can do this with a lot of currency pairs, so we don't have to manually manage everything, because it's just impossible. When the news gets released, we are dealing with microseconds kind of reactions here. All right, so this example here, we have a market as flat. It creates that corridor volatility. What we want to do here is we want to place a buy stop above that range, and we want to place a sell stop below that range. And you can see the news is released, it hits your buy order, and then it runs up. Now, typically, because we only won one trade on this, and we got the buy trade, so we need to kind of immediately cancel the sell stop, okay? So this example here shows you that breakout, market runs up, takes your your buy order there, and then just lift up. Once it's really far away from your entry, and if you want to manage your risk, because we do see a lot of whipsaw, we do see a lot of reversal that could happen in the market, you want to move your stop loss to break even. And once you do that, this would become a lossless zone, or I would want to call it, this is when your trades becomes risk-free, because if the market reverses, it will just take you out at your entry level. Okay, so it becomes a risk-free trade. And that's what we try to achieve a lot of the times when it comes to news trading, to protect our position. Okay. So let's just jump onto the platform very, very quickly here. And I want to show you the Octa Trader platform here. I want to use this one here. I'll show you what it is. But before that, I do give out updates. Like, for example, today, you can actually go to a place called Space here, right? That's basically where you're going to get your feeds, and you can filter it out. Obviously, right, with whatever you want. You can also follow channels here. You got my weekly insights there. You can click on that and you can follow that. But yeah, typically any updates that I posted out, it'll be there. It'll come with a title as well. It's going to be my weekly insights. But yeah, you can read through about what's driving gold, for example, and what's really going on from the geopolitical perspective, right? So these are your news updates, basically what's dividing the Fed, what's the gold's dollar strength here, some of the key levels that we're keeping an eye out for gold and whatnot. It's all there on the platform here, which is Octa Trader. If you don't have this and you're trading from your trading app, if you use Octapulse, I think that's what it's called right now, you should have this space there as well. So you can read up all the updates there as well. Okay, so yeah, just a little bit of a promo plug there. But let's take a look at the US 30, for example here. The US market, I know, is still closed, but it might actually be opening up. We actually do see this one here more or less in a little bit of a range here. We do have that corridor volatility developing here right now. And let's see if I can kind of cordon it off so you can see that corridor volatility, right? And this is the area that we want to take a look at. That's basically your corridor of volatility. Let's see if I can delete this. Nope. Nope. Okay, never mind. Anyway, it's there. So what we want to do here in this example here, for example, news is going to get released in the next 5 minutes or so. We can create a new order here, right? And you want to go to your pending order instead of market order. You can go to pending order. And I think, you know, we might actually see a little bit of a breakout happening, right? So my entry price, I'm currently looking at maybe 46,500 there, right? If I place 46,500 and then click on that, that would be my buy stop, right? So that would be my buy stop there. You know, I can set up my volume as well. For example, I can do one. I want to take my profit here at maybe 46,600. And then my stop loss, you know, currently it is at about 46,461, you know, maybe I don't want to risk more than 46,400 if we do see that break above 46,500, right? So we can set it up. You can even set your trading stop loss, you know, and whatnot, but yeah, I'm not going to be using that. You can also set the break even distance in point as well. You can set it on to when it expires. Maybe if you don't want this order to roll over tomorrow, then you can set your expiry and whatnot. So I'm going to place that order. So we've got a buy stop for one lot there. And at the same time, I'm going to be placing a sell stop as well, a little bit lower here. If it does break 46,400, then that's where my sell stop is going to be, right? So there we go. I want to see a sell stop, and that's basically what it is, okay? So what it means is if the market goes, just trying to see if I can get an arrow here. If it goes higher, then it will actually trigger a buy position. If it goes lower on that news reaction, then it will trigger my sell stop. Okay, so this one here, that's basically it in terms of setting up the pending orders. Okay, very simple. It is recorded, so yeah, you can review this later on. But those are going to be a sell stop, and that's basically how we place the sell stop orders. Okay. Now we need to go through very, very quickly because I want to talk about the buy limit and sell limit strategy as well. This is not going to be for beginners. The sell stop and the buy stop orders, that's okay for beginners. It's very easy to understand. But when it comes to the limit strategy here, this one here, it requires I don't even think it's actually basic, but it does require that you have a good grasp on the technical because we are looking at price reactions here. Now, if we take a look at what's on the example here, you're looking at local previous high here, and you're looking at the general trend, for example, and you say, okay, what if price gets there and it fails? If price gets there and it fails, then I want to create a sell order, because if I do that, the rejection that happens typically could be very strong and your stop loss is going to be very, very small. So let me just go back a little bit. And if you take a look at stop loss here, comparing it to stop loss with the limit order, it is a lot smaller. So the limit order here, I think the advantage here is that you are going to get a huge risk reward ratio, right? It could be 1 to 2, 1 to 3, 1 to 4. But the trade-off is that you are placing an order that is countering whatever the market movement is, okay? So this is more of a contrarian trade. And if you don't understand what you're doing, this is not going to be for you. But I'll show you how it's done here, and we might actually look at it from a different example. I might take a look at gold here for a minute. And I think gold is currently moving a lot, right? You can see what's going on here. Now, so for gold, you can see the pullback that's happening. It's not noticeable on the daily time frame, but if you take a look at it on the hourly time frame, it is pretty noticeable. We have hit our support levels for gold. Let's see if I can get a parallel channel just to kind of highlight a couple of stuff here. But yeah, okay, this is not helping. Let's see. Let's do a rectangle here. But this area here, it's basically going to be our support levels, right? You can see what the movement has been happening. That has been happening here is that price comes back to the support level and it bounces up, and it comes back to it, it bounces up. Well, if we take a look at it, and the previous positioning here, that price has been bouncing off basically about 39.50 for gold. So what I can do here is that I can create a new order. I want to create a new order here. I want to create a buy limit. And I like 39.50 as my level. So I'm going to place one lot here. My take profit is because we have seen a higher projection on this one here. We might actually look at a potential push higher towards maybe 4,070, right? My stop loss, because I don't want to risk too much just in case, you know, if that support doesn't hold. We'll take a look at this one here. It's about 39.22. So my stop loss is going to be at about 39.20. Okay. So if I place my order there, you can see what's going on. That's basically my position. Now, if you look at the risk reward ratio here, the distance from my entry is about $30. But the potential profit is a lot, right? We're talking about 1 to 2, 1, 2, 3, about 1 to 4 in terms of risk reward ratio here. So, you know, we look at this and say, okay, this is I think that's a reasonable level, because I'm placing a target that's slightly above that high that we have here. And in terms of my stop loss, I'm putting it at the extreme there, because any break below that level, we might actually see prices dip down a lot lower, right? You might actually see price, if it does break the support level, it might actually take it down to 3,800. So I don't want to risk that kind of crazy trades there. So that's the reason why I placed just a stop loss there, so we can see what's going on here. So we got our stop loss there. I think that's very reasonable. Our entry point is here. That's going to be our limit order. So what I'm anticipating here is that we want to see price comes back to this level and then bounces up. Okay, so we're anticipating the support level to hold, and that's why we have our buy limits here, just in case if it does pull back to 39.50 while I'm asleep tonight, my orders is going to get filled, and if it does bounces up, then I'm in a long position. Okay. What news events I'm trading? There is no news event today. The US government shut down, and this is a theory session, right? For CPI, it will still be scheduled on the 15th, but I do have my doubts. We didn't get the NFE numbers, and I doubt that the US government is going to open by Monday or Tuesday. So there's actually a higher probability we might actually miss the CPI numbers. Okay, this is just an example. We're not trading any news here. This is just an example in terms of how you use the order types, okay? All right, so you can also trade news after the release. You can use a limit order, you can use a stop loss order if you want to. But yeah, since we are kind of out of time at this point in time, we're kind of speeding up through a lot of this stuff here. But I'll just answer this one here. If you want to answer it, it's fine, but I'll just give you guys a very quick answer into some of this, okay? So just a quick test, you know, if you see a surprise rate hike from the Fed, which assets are likely to spike? And what would you avoid trading, right? I would trade anything that has to do with the US dollars. I would trade gold. I would avoid any cross currencies, like the euro pound, the euro yen, sterling yen. Those are not going to have a direct impact. Now, if the NFE report is due in 10 minutes, for example, what kind of pending orders would I place and where? Depends. If I see the corridor volatility, I will use the buy from the sell stop orders to straddle the market. Now, if price breaks below a major support level right after CPI release, would I use a sell stop or would I use a sell limit? And if it does break the support level right after the CPI release, I would actually use a sell limit, because that breakout that happens needs to be retested And if it is a major support that is broken, we expect that retest to fail once price comes back to that level. So a sell limit around that level it's much preferable. The sell stop wouldn't be useful because we already have that breakout. So before a breakout happens and you anticipate a breakout, those are when you use the stop orders. If we have seen a breakout and waiting for that retest to happen, then we want to use a limit orders. Okay. So the 4 type pending orders that we just talked about tonight is the buy stop, the sell stop, the buy limit and sell limit. And the rules is very simple. Stop orders are basically trend continuation. Limit orders are basically if you anticipate a bounce or a reversal to happen. Okay. All right, so this is the code. It's long form 2025. Feel free to use the code. It is valid until the 31st of December 2025. Now, the next session that we have here is going to be on the CPI number. It is going to be on the 15th. Let me just double check very quickly. Is it still scheduled on the 15th? Yes, it is scheduled on the 15th, same time. I'm actually not going to be the one doing it. Daryl Yahya is going to be doing that with you guys. That will be on the Wednesday. That's going to be on the 15th of October. So just be ready for that 15th of October. Just in case the US government does open, but if it doesn't, there are still other datas in there as well that you can look at, right? I believe on the 15th, if we take a look at what's going on the 15th, there is still a lot of data released on the 15th, and about 7:30 p.m. we are going to get our New York Empire State Manufacturing Index. This one here, I don't think this is a private release. It's not going to be government release, but yeah, we're also going to be looking at that inflation number on the 15th. But just in case, if it doesn't pop, you know, I think they're still going to go through some strategies with you guys as well. Okay. All right. So with that, we do apologize for the late start today. But again, it has been a very weird month that the US government shutdown has now been prolonged at this point in time. Hopefully we do see the government reopens on Monday or Tuesday. But until that happens, no federal data is actually going to be released. FOMC is still going to comment. FOMC is still basically working. It's still operational. So any data that's actually being released by them is going to be released. The Michigan consumer sentiment numbers that's going to be released today, that's really being released by University of Michigan. So those are not federal government. Those data are still going to be released. All right. Well, I would just take it easy at this point in time. Is it troubling? It is troubling because it's really weird that it comes at a time where, you know, the FOMC needs those data, and for some reason it looks to me like this is engineered shutdown by Trump. So we'll see what happens here. But yeah, you know, some conspiracy theorists are probably heading into that direction there. I have my own thoughts on all this, but yeah, it does seem very much artificially engineered shutdown at this point in time. All right, so with that, good luck with your trades for next week. Have a fantastic weekend ahead, and I guess I'll see you guys next month because next week, you know, I'm actually not gonna be here to do the CPI with you guys. So I'll see you guys next month, and hopefully next month the US government is open. We're gonna get our data, so everything is stable. All right, stay safe everyone, and thanks for joining in.